In the recent past, China's taken several measures, steps to open the financial market more to foreign investors and foreign institutions. Does that process make China less vulnerable to a financial decoupling with the U.S.?
Opening up has always been a key strategy of China's growth over the last 40 years. And that is also true for the financial sector. And so despite all these tensions or the talks of decoupling, the opening up pace of our financial market has actually accelerated during the last year or two. And since the beginning of this year, in terms of lifting the equity cap, right, of foreign financial firms operating in China, we've made a huge stride.
Do you think that pace will accelerate, or what do you think of the pace of that opening, those approvals?
Yeah, that's a good question. I think it would accelerate for several reasons. One is, the Chinese the Chinese economy, despite the challenge of COVID-19, has actually recovered quite nicely. And during the last 3 weeks or so, I went to Hainan, I went to Qingdao, and I went to Shenzhen, and then I went to Guangzhou. So I went to 4 cities during the last 3 weeks. And just based on my own observation, the economy seems to have quite fully recovered. Because when I was in Sanya, having a short vacation, all the hotels were full. The cafeterias were full. It was incredible. So the consumer power of the Chinese economy is just amazing. And I have a sense that in about 6 months or so, the Chinese economy will again be the locomotive of world growth. And so I think the capital markets in China will continue to be quite active, right, and also continue to expand. So that provides a basis for foreign participation in our capital market, right? So that's one reason. And the other reason is that for our capital market to really progress, to really develop into an effective capital market for high-quality economic growth, we need foreign participation in our market. We need higher quality financial services. And that's something that the foreign firms can provide. And in terms of stock market, and the interesting thing is that China is a very, very high saving economy, right? So there are a lot of retail investors in our economy, and that was behind the very active trading in our equity market this year. But retail investors, they don't know, or they're not very good at determining the value of a stock, right? So we need a lot more institutional investors in our market, and the foreign money are usually coming from institutional investors, and we have seen that they have a much better sense of what a stock is worth, and so the presence of foreign investors in our market has provided a kind of an anchor in the valuation of the market. So the continued presence of foreign investors in the market will help promote the quality of our stock market. And so we welcome more participation. So both from a demand and a supply point of view, I do expect the foreign participation in our market, whether it's in providing services or providing capital, will accelerate.